Let's focus, guys. We are on pace for the worst stock market performance for the month of December since the Great Depression. Yes, you heard me right. The Great Depression. Like, how long ago was that? Like 1931. That's what we are talking about, guys. This is unbelievable. I want to go through some charts. I want to talk about this a bit. I want to talk about 5 reasons why you should be happy this is happening, okay? So first off here, top 10 worst S&P 500 December performances. As of right now, we're about halfway through the month of December, and we are on pace for literally the worst performance in the S&P 500 since the Great Depression, okay? Look at the chart there. That is unbelievable. You think about all the different times in December that have been bad in the past, right? Because of different reasons or different time periods, and this could be the worst since the Great Depression. This is unbelievable, okay? If we look at the Dow, top 10 worst Dow December performances of all time, we're on pace for the worst since the Great Depression, okay? Since 1931. Now, December is typically a very positive month for the markets. The Dow has only fallen 25 times in December's going back to 1931. So most years, December is a good period, okay? The Santa Claus rally is generally a real thing, okay? Generally speaking, the markets go up in the month of December. It's good. If we look on average, the S&P 500 averages a 1.6% gain for the month of December, making it typically the best month for the entire stock market. Usually December is a month where I will almost buy no stocks just because the market's just in a Goldilocks period. It just goes up and up and up. You can look back year after year. Like, since I've been in the stock market since 2008, 2009, almost every single year, like, the markets were really good in December that I can look back at, okay? So the fact that we're having this bad of a December, like worse since the Great Depression, is unbelievable, right? If we look at what happened in the markets today, we had the Dow fall another 500 plus points, over 2% drop. We had the NASDAQ drop over 2.2% today. NASDAQ peaked out at, I think it was around 81 or 8,200 this year. Now we're down to 6,700 on the NASDAQ. S&P 500 was down another 2+% today. If I look at all the stocks I own, every single one was down today. Everything was red. My son looked at my stock tracker app. He said, "Dad, where are the ones that are up? There's nothing up today," okay? This was just a rough day out there. So, guys, I want to really talk about this into depth here. Why you should be happy that this is happening. Now, first off, I understand everybody that's in the stock market right now, the short-term pain is no fun, okay? Whenever you go through short-term pain, I don't care if you just have a 401k, to see that going down in value, to have a brokerage account if you're an individual stock picker like myself, to see your account value go down because, you know, the markets are rough. The short-term pain is never fun, but it's something you got to understand. If you are in the stock market, you're investing in the stock market, you're going to go through periods of short-term pain. It's a bottom line. Sometimes it lasts a few weeks, sometimes it lasts a few months, sometimes it lasts 1 to 2 years. You don't matter what, in this game, you are going to go through short-term pain. It's the bottom line, okay? If I went outside right now and ran 20 sprints, man, that would be a lot of short-term pain. I would be feeling like death after those, okay? But guess what? It's long-term gain in the end, all right? You just got to deal with it, all right? But the short-term pain is no fun. I understand it. Like, it is what it is, all right? But what I will say one comment about that is I feel personally, I'm looking at it and I'm like, I can't believe this is, we're on pace for the worst December since the Great Depression. Because personally, when I look at my accounts, I'm like, yeah, we're down, but it's not like we're down that much where it's like, oh my gosh, this is a disaster. So I'm actually a little surprised that we're on literally pace for the worst December since the Great Depression. Like, that actually surprises me a bit. I knew it was rough, but I'm like, that rough? That's insane, okay? So number one, why should you, welcome this? First off, you get to buy a lot more shares for a lot cheaper. Whatever any of the bears want to say, whatever any of the short sellers want to say, there's one fact out there, and that is the stock market goes up over time, okay? Now, short term, yeah, we have crashes here. A market can go down 10%, a little correction. We have an actual crash where the markets go down 30, 40, 50%. We can have bear markets, all that type of stuff, okay? But if there's one thing we know, the stock markets go up over time, okay? So the fact is, right now, you're getting to buy shares a lot cheaper than if you would have bought, 6, 9, 12 months ago. That's the bottom line there, okay? So you as an investor out there, as long as you still have a good income or hopefully an increasing income in 2019, guess what? You're going to be able to buy more and more shares at a much cheaper price and be able to hold great companies for years into the future when all the short-term mumbo jumbo passes, and next thing you know, we're up and up and up. So that's the first reason why you should welcome this. The second reason why you should welcome a horrible December like this is most companies have massive share buybacks on right now, okay? Most stocks I own have share buybacks on, which means these companies, these big corporations are getting to buy their shares back for a dramatically cheaper price than if they would have bought 6 months ago or 9 months ago. We're talking about most stocks are down 20, 30, some even 40 to 50%. So we're talking about a dramatic amount more of shares these corporations are going to be able to buy with basically cash on their balance sheet or the profits coming in, which is a great thing for those corporations long term. It's going to help out earnings per share in a dramatic way, which is great for valuation purposes. It's also great for you as a shareholder. It's more money the companies can pay out in dividends because it's basically less shares out there to be counted against, okay? So it's not only can you buy more shares when they drop, but the corporations can buy a lot more shares, which will help out EPS down the road, okay? The third reason you should be welcoming something like this is if we actually have a recession, there's going to be less to fall, right? If you know, earnings have been amazing this year. Like you would think like the market should maybe be at 30, like the Dow would have been at like 30,000 or something like that with based upon earnings. There's been one of the strongest earnings periods I've ever seen, in my life, certainly of being in the stock market. And even if you go back to further periods, like we've seen very few times in history where earnings have been as strong as they've been this year. So basically what that means is you would think that the markets would be up dramatically, but this year we're going to definitely finish in the red, it looks like, unless we have a massive comeback in the next week and a half. So it looks like we're going to finish this year in the red, which means essentially we're going to have a lot less to fall if there was actually a legit recession or something really bad happening in the economy. We've seen slowness out of China. We've seen Europe numbers kind of be okay. U.S. numbers have been pretty strong for the most part, but we haven't seen anything out there that says, oh my gosh, we're going to have a global recession or something really bad is going to happen. But if something happened, we're going to have less to fall because the markets have been so weak this year. So that's the good news, because the last thing you want to be is, Dow 30,000 or something like that, and say the Nasdaq's at 10,000 or 9,000. Then you have a recession come out of nowhere and the markets just get hit dramatically. That's what happened in 2007. You went from a market, being in a Goldilocks period, everything being at all-time highs, and then in such a rapid amount of time, things decelerated and the markets fell about 50% from their highs, okay? So the good news is if there was actually legit something bad happen, there's less to fall. Reason number 4 is right now there are a lot of people making, a lot of money for their put options, and there have been for months, okay? Put options, just buying put options straight up, that's a way a lot of people have been making a lot of money in a lot of these names. When you get stocks going down 20, 30, 40, 50%, there's so much money to be made in put options. It is ridiculous, okay? The second way is basically if you hold shares in a stock, you could basically be selling, written call options or something like that, and go ahead, write call options, you sell it, and guess what? The shares are likely not hitting the price, so you get to just make premium while you hold shares that you actually love for the long term. You get to hold them. You're selling these call options up here, and they're never hitting those strike prices, so you're just getting all that premium, okay? So options, there's definitely a lot of money to be made in options right now. There's people making fortunes on options. Sometimes, this is really, how people can build an account from 100,000 to, a few million in a very short amount of time is through actually, options in very volatile markets, okay? If you go the wrong way, and let's say you were going all call options for the last 6 to 9 months, then obviously you can devastate your account the wrong way, right? Reason number 5 is you got to ask yourself, would you rather be at a peak bullishness in the market, or would you rather have peak bearishness in the market? I put out a poll on Instagram earlier on my Instagram stories, and basically I said, okay, the stock market, is the selling going to stop in 1 month from now or 12 months from now? And what I saw was 65% of people that follow me on Instagram, those are just retail investors for the most part, right? It's not like I have big fund managers following me on Instagram, or at least from what I understand, right? 65% of retail investors are saying that basically it's going to be, 12 months or maybe even more than 12 months till the selling stops, okay? That means we have a lot more people that are bearish in this market right now than we have that are bullish, right? If I would have went back, let's say about a year ago and done that same poll, and maybe done a poll that says something like, will the stock market go up in 2018 or will it go down in 2018? I can almost guarantee you 90% plus of people a year ago would have said the market would be up. So that was, a time period where maybe we were at peak bullishness. But if I look at it now, Maybe we're not quite at peak bearishness yet, but if I look at it, I'm just seeing massive amounts of bearishness out there from retail investors, from the media, from the analysts out there, from hedge fund managers and whatnot. That actually makes me feel a lot better about the market when I see this type of bearishness out there, because that just means you're close to a bottom. Does it mean you're at a bottom? Absolutely not. But I can tell you, when everybody's bullish out there, that's the biggest time to worry. When everybody's bullish and you can't find anybody that's bearish, that's usually the biggest time to worry. When you're starting to see more people that are bearish than bullish, that's actually a time to start feeling good about yourself, because it looks like you're getting closer to a bottom than if everybody's bullish and you're way up here. It's a totally different game. So when I look at it right now, I'm very comfortable with how many people are starting to turn into bears now. It makes me feel like we're a lot closer to a bottom. So that's a good news there. So as far as, stock market's falling, short term, it's pain. Long term, if you have a long-term focus on this, man, it's all just going to be mumbo jumbo in the end. And a few years back, we're going to look at it and it's just be another time period in the past, just like all the other time periods in the past before. It shall too pass. And the name of the game for me is I just try to buy undervalued corporations. If they want to trade them even lower, I'll buy. That's the bottom line. I'll buy great American corporations. I believe in the American system. I believe in the global economy over time is going to do phenomenal, and that's just the name of the game for me. Whatever happens in the short term is whatever happens in the short term. Let me know what your guys' opinion is down there in the comment section. We'd love to hear from you guys as always. Thank you for watching and have a great day.
The real test of whether you're investing from a value standpoint or not is whether you care whether the stock market is open tomorrow.